Yeah, hello and welcome to another update video about gold. So finally gold starts to make some movements and we actually have some 5 waves to the upside now. We have a few good developments on the chart. First, let's take a look at my overall higher degree wave count. But yeah, this certainly, the movement of gold that we've seen in the last week was certainly the biggest movement to the upside that we've seen since February. So that is a first good signal. So for everybody who's new on this channel, we've been talking about gold now for a while. This is the gold futures chart, where we're looking at the larger cycle that actually started back in 2000, well, just quite early actually. This chart starts at 1975. We hit our wave 1, 2, 3, wave 4, bottomed out in 2015, end of 2015 in December. And that was the wave 4, and we're now in the 5th wave. At least that is my primary expectation, the primary interpretation, the main interpretation of this chart, and that is valid as long as gold holds above the $1,600 level. Within this 5th wave, we have obviously 5 waves as well. So the 5th wave is an impulse normally. So what we're looking here is this as a wave 1, which peaked in 2016 at around 1370. We then came down in a wave 2, bottomed at around 1130 in 2017. We moved up in a long wave 3, often the longest wave, the largest wave, to around $2,000 in 2020. And we are now in this 4th wave, which might now actually be complete. We hit this target area that we've been talking about months ago. In fact, I mentioned the current, or the, let's say the $1,600 to $1,700 range already back in January. I warned about that, and we've come to this area, and now we're just waiting for signs of a bottom, which could have occurred last week. So we look at now the wave 5 to the upside, a last wave to the upside, could reach sort of the region around $2,500. But then, and that's the big problem, I mean, this can take years to get there, don't get me wrong, it can take years to get there, but this would, as per this interpretation of the chart, it would finish off a larger cycle. So this would mean if we peak here around 2,500, it would complete a wave 5 over wave 5, the larger cycle, a wave 1, and then what that means is that we should come down in a wave 2. The wave 2 should be quite strong and can take us to a 3-digit gold price. Alternatively, if we now lose the $1,600 level, here, this yellow box, then we would already be in a wave 2 and could see a 3-digit gold price. That's why it is so important for gold to hold the $1,600. That is why my target area has stopped at 1,600, because below that we are going to go into a different scenario. We're morphing into a deeper retracement into a wave 2, because then we would have to say that what I have labeled here as a WXYXZ correction, this wave X would then have to be the wave 5. And then we would say all of this is already done. We're already complete with our larger cycle, and we are already on the way down to 3 digits. This is what we don't know, and therefore this $1,600 level is so important. As I mentioned before, if we briefly drop below it, it won't be a disaster. But if we go below it and we stay there, let's say for a few days or so, then this would become my primary expectation. So you should all know this just for your risk management as well. But for the first time ever, we've broken out of this channel to the upside now, this corrective price channel to the downside, and that is a really good sign. And if we now reverse finally, then my primary expectation would be would have worked, because the idea was to get into this region, and from wherever, because you never know really in the short term, but anywhere in this yellow box, the primary expectation would be to reverse and to move to the upside. I am skeptical still about this move, because the real stress test will occur in the next retracement. And we talk about that because so far all the retracements to the downside failed. We had 2 attempts to move up now, since we've been covering gold here, 2 real attempts, but both failed, and the retracements never really held higher lows. But that is so important. So let's go down to the 4-hour chart. In the last video, and it's been a while now, we've been talking about this possible scenario of a breakout to the upside, but only if, and only if we break above that descending trend line, which happened. Told you that to validate a breakout to the upside, we really need, 5 waves to the upside. and we have seen 5 waves to the upside now. So we're going to talk about that now. We did say in the last video, gold needs to hold the yellow support box here. So let's say the yellow box in the yellow box to it needs to hold it to make a breakout to the upside possible, and it did hold it. Yeah, it did hold it, which is really, really good. So in the last video we talked about if we hold it, there should be one more leg up before we see a retracement. Now this has changed because it did really pump a lot. So let's say after the breakout we moved higher, but we moved higher, you know, quite a bit of a distance. So again, you can see how relevant this resistance area was, this descending trend line, because the moment we broke it, that is when we really moved up significantly. In fact, we moved up from the breakout like 5.5%, which is quite decent for gold in a short period. So yeah, hopefully that the hint I gave you about this descending trend line was helpful, and the idea about holding this support area was helpful as well, that if we make a higher high, this would lead most likely to a bullish outcome, because then you get 5 waves up, right? So, however, I need to, due to the extensions here, I will have to change the wave count a bit. I'm also going to tidy that up a little bit while we're here together. So this is now a very clear 5 wave move to the upside. That is actually exactly what we want to see. Yeah, so this is really helpful. Again, that's exactly what we want to see, because this shows a clear impulse. Now, this can also be interpreted as some kind of a corrective wave, but it's less likely. And therefore, I always say, especially in the current market environment, the next retracement will really give us, well, the idea of where we are here with the gold price, because it is the, you know, whenever you see 5 waves to the upside, that's like the first indication that things are changing. Yeah, that we have changed from a downtrend into an uptrend. But it will then be the retracement that will really confirm that things have changed. Yeah, so it will be that major retracement in a wave 2. So let's actually take a look at where we are now with the lower level wave count. We take a look at the pattern and the waves. So my view is that we have now done, so all of this was wave 1. So I'm going to label that. This is how we generally would expect this to turn out. Wave 1 up, and ideally, if this really is a bullish breakout, the wave 2 would come down again, maybe retest the channel. Then we should move up in a wave 3. There would be a wave 4 and a wave 5 to the upside. If this is playing out as per the bullish count, I can give you now already a target for wave 2. Now, I have to say very clearly, we haven't got a signal that wave 1 has topped, but looking at the indicators, I mean, on the 4-hour chart, we're now massively overbought. On the 8-hour chart, we are massively overbought, actually the highest reading since March 2020. On the daily chart, we're also getting overbought now. So I would say, you know, it's near enough exhausted. It's also at resistance here at the previous swing high around 1775. If it pushes higher than 1775, I think it would unlock prices all the way to 1825. That would be quite a substantial extension to the upside though, but never say never. I'm just telling you, if we go higher, which I wouldn't expect, I don't think we go much higher than where we are now. If we do go higher, then it would unlock prices all the way to 1825 in wave 1, right? But let's say we've topped now, because I need to base the retracement now on something. I need to make some assumptions. And I think either we've topped now or we're near enough there, but I need to make some assumptions to give you a target for the wave 2 retracement. Bear in mind, this could move up further, this target, if this wave 1 goes higher. Very clearly, we haven't got a sign that it has topped yet. Target for retracement in wave 2 would ideally be between the 50% Fibonacci retracement and the 78.6. So between 1697 and 1652. That would also be exactly where this descending trend line is. So in any move down now, if we're holding this descending trend line, that would be a good sign. That would actually be a retest, and that could be quite bullish if we hold this support. Okay, so very important. Ideally, we don't want to break back into the channel. I think that would be a really good sign. If we drop below 1652, it would most likely mean that this is not working out and that we're actually in an overall bearish wave pattern. Now we can make some assumptions for the target of the fifth wave. Yeah, so this would be embedded in a larger fifth wave, which again would in turn be a higher degree wave 1. That would then most likely be the wave 1 of the wave 5, right? I can give you a target for that, let's say a textbook target, but that is again based on some assumptions that we've peaked already and that we're going to bottom, let's say maybe sort of in the region around, yeah, 1640, okay, roughly 1650. Then the textbook target for that would be around $2,050. But this might, we will have to specify that further as we know how long wave 3 is and so on. So let's label the lower level wave so that you can actually see the 5-wave structure more clearly. So if we do that, we would start, we would start down here at this sort of low, the wave C low, right? At around 1620. And I would say we had here a wave 1 there, a wave 2 down here at around 1630. Then we moved up here in wave 3, which peaked at around 1720. We had our long wave 4 correction, and then this is the wave 5 to the upside, which can extend a bit further out. Just change the wave degree here. Yeah, but this is sort of, this just shows, we are sort of near enough exhausted in my opinion. Here in wave 1, yes, again, it can push higher, but it is basically at key resistance now. You can see that previous swing high here at around 1775 to 1780. There's a good chance it gets rejected from there. And then we should come down in wave 2. So personally, buying in, might be an option for me here in the wave 2 support area, because what we've seen here so far, all these attempts to the upside in the end turned out to be just sort of fake outs to the upside, and we came down and never held support. But this is the support area that needs to hold. This is the area where with the highest likelihood we should get into, hold support, and then move up if this bullish scenario is valid. Again, if we drop below 1651, it's probably not valid, and we're going to see one more lower low, and ideally this should hold the $1,600 level, 1605 ideally, and we shouldn't drop below it, because if we do, then again we're getting into a much more bearish wave pattern. But yeah, that's my update about gold. Have another chance now to finally break out here. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.